Hello, how to read stock charts for swing trading, uptrend and strategy for beginners. We have 4 stocks here that we can analyze together, and the first one is JPM. We are using a Thinkorswim platform. It's free if you have just swap, and we are going to use, if you have just swap account, it's free, and we are going to use maximum daily chart. JPM. So JPM, to read this chart, we are going to take a look at where the price is right now. And today is October 14, 2025. The market closed yesterday and has not opened today yet. And the price is highlighted in green. So that means yesterday the price went up. The price at the end of the day was higher than the price in the morning. So the bar will be a green bar. The price went up that day. The price at the end of the day was at this level when it opened at this level of that rectangle box. It went up all the way to the tip, and I don't see too much bar at the bottom of it, but just a little bit there, but it's a green bar. So you'll pay a little attention to that price, and then you will compare where the price is, where the chart is, to where you want to buy. So you will trace support line, long support line, that's the long uptrend line strategy. You will trace long support line passing by the valleys of the chart, the mountain, because the chart is fluctuating, making mountain and valleys. So passing by the valleys of the mountain, and you will see the one that the price touch point with few times at least, that you feel like it will come back down there before going back up. You will select the one that you are comfortable buying the stocks, buying some share at when the price fall back to that level and start going up from there. And you will compare, when you do your daily chart analysis, you will compare where the price is to where you want to buy. When we are looking at this chart, we'll notice that it touched base with this support line and is going up. So the last higher new high was around this, because those are large cap stocks, they do reach a peak frequently. It pulled back to the support line that we are targeting to buy, went up, pull back to it again, and start going up from there. So reach a new high from this trip, this mountain, claiming it reached a new high somewhere here and start going up from there. Pull back a little bit here, but then start going up again, but didn't touch base with it. So it reached a peak here not too long ago, and it pull back a little bit and start going up. At this point, we'll just compare this and say that it's still on the claiming on the upside of the mountain, claiming up. Is now ready to go down here, because the mountain has up and down sides. So it's still on the upside of the mountain, is now ready to go down yet, and we like to buy at the valley. So when it comes down to the valley and start going up, and at this point it's still higher up, therefore it is not a buy if you are using long uptrend launching trading strategy. So the next one we are going to analyze is going to be KR. So KR, we have this support line that we like to buy at. It touch base with it and start going up from there, reach a new high a while ago, pull back. Yesterday the price went up, so the pullback start going up from here. We don't know if it's done going up and is on its way going down. Either way, the price is higher than where we want to buy. It has not come down to the valley yet. Therefore, you'll move to the next stop. That is how you read the chart when you do your chart analysis. The next one is LII. So LII, we have two support lines here that we color code to buy at. We have this one that is supporting the upside wall of the mountain. So it touched base when it is done with this previous high. It pull back to touch base with the support lines that we like to buy at and start going up from there. Reach new high from this point on all the way. Last year or so, or this year, we bought it somewhere here and sold it somewhere there. We have those arrows to point out where we bought and where we sold. It pulled back, went up, pulled back, went up, reached a new high, and is pulling back. Maybe it's done going up and is on its way down. Yesterday the price went down. That's why the price is highlighted in red. That means the price at the end of the day was lower than the price in the morning when the markets open. It will be a red bar. But when we are comparing it to where we want to buy it, it's still high. It's far from the valley. It's not there yet. Therefore, it is not a buy today either. But you can see the mountain is well defined here. When you can see the upside wall of the mountain, and it could well be on its way, walking on the downside of the mountain. But it has not touched point with the valley lines or the support lines and start getting ready to go up yet. Therefore, we are just going to keep observing it because we do not want to pay too much of a higher price for it and then it will pull back to the support line before start going up. We might stay in the trade for a lot longer until it reach where we bought it and start going up before we can start seeing profit. Therefore, it's just better we wait until it reach the support lines. When it start going up from the support line, it will start making higher lows. And after we see few of those, 3 or so, we can buy at the first or second green bar that follow a pullback and then continue the ride. So the one more that we are going to analyze is LLY. LLY is highlighted in our portfolio because we bought it, we have not sold it yet, and we bought it in 2024. And as you can see here, we bought it quite a bit in 2024. We purchased it and we sold it, and we purchased it again, and shortly after that it reached a new high and it was done. So it started going down, making lower highs. So you can see, it has now surpassed that level here, and since we bought it somewhere just like the way I explained with the previous one, we bought it there and it was done going up, we got trapped in it. So, and in 2024 we used short up to long swing trading strategy, but in 2025 we are using long up to long swing trading strategy. So we have this support line, the valley line, that we like to buy at next. And as you can see, the mountain, it climbed up and now is climbing down, but it has not really reached that support line yet. Yesterday the price went down. We have a red bar there, but still to where it is, it has not touched point with this support line yet, and is far from where we bought it as well. So if it's climbing down, it will take a while for that to touch point with that support line and start going up from there to surpass where we purchased it. So we could well stay in this trade longer, and we have been in it for over a year now since we bought it in August. So, and we are in October now. So that is how you reach the chart, and we bought it and we have not sold it because we don't want to sell it at a loss. You pick good stocks to swing trade if you end up buying it at a higher price, you can just leave it in your portfolio until it becomes positive for you to sell, and you just learn from that experience and see what didn't go well and do it better next for the next stocks you are going to purchase. And little by little, you are practicing the strategy you are using, and you are improving your skill, your swing trading skills as well. So you pick good stocks to trade, and you allocate a small portion of your account capital to each trade at the beginning. If you can just buy one share to begin with. That way you'll be able to stretch your capital over multiple stocks on your watch list to test them to see if they work well with the strategy you are using. And from that point, when one of those stocks you've previously purchased and sold for a profit, and can confirm that your strategy work well with that stock, when you are going to buy it again to increase the profit that you made previously trading that stocks, you just buy more shares. So that will be as at the beginning, that will be a cautious way to proceed, and little by little there you can continue testing the boundaries of that strategy to see how you can improve it, how you can personalize it to meet your risk tolerance and your personality type, and slowly you'll grow your account from there. So that is how I like to read the stock, by analyzing it to see if a stock reach the support line we like to buy at, and once it reach it and start going up from there, you'll buy. And when you buy it, you'll just keep comparing where the price is to where you purchase it to where you want to exit, and where you want to exit is going to be after it reach a new high. And we have strategies to share how you will, the strategy you will use to test to determine where you want to exit. And yesterday video we touch point with that as well, and the list of those playlists related to swing trading will be in the video, in the description of this video. So thank you so much for your time. We thank you very much for watching our videos. We thank you very much for all your time, and we thank you very much you all that subscribe to our channel. Thank you for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Thank you for your time.